Welcome to the channel. Here, we provide clear, actionable insights into the complex world of tax and accounting to help your business thrive.
Okay, let's talk about something that defines how millions of us actually work. Are you an employee or are you a contractor? It sounds simple, right? But the line between them is like a high-stakes tightrope, and it has some huge financial consequences. And as you're about to see, the reasons someone might choose one over the other, well, they are not at all what you'd expect. So let's jump right into this with a bit of a puzzle. You know, we usually hear stories about businesses wanting to hire contractors to save a buck and workers wanting the security of being an employee. But what if it's the other way around? The story that kicked off this whole explainer was about a business owner who was completely confused because the person they wanted to hire was insisting on being a contractor. Why on earth would they do that? That's the mystery we're going to solve today. To really get to the bottom of this, we've got to understand the classic tug of war that's going on. For both the business and the worker, this isn't just a job title. We're talking about a decision with some major financial and legal weight. So let's break down the motivations on both sides of the coin. Okay, so if you're the employer, the logic here is pretty simple. Hiring a contractor is just way, way cheaper. You don't have to pay for things like workers' compensation insurance if they get hurt. You generally don't have to sweat about paying overtime. And, this is a big one, you don't have to pay your half of their payroll taxes. And it's not just about the direct costs, right? It's also about cutting down on your obligations and your legal risk. With a contractor, a business owner usually isn't setting their hours, providing their tools, or paying back their business expenses. And maybe the most important thing of all, the risk of getting hit with a wrongful termination lawsuit is much, much lower. It just simplifies the whole relationship. And here is the number that really, really drives this decision for a lot of businesses. 7.65%. That is the employer's share of Social Security and Medicare taxes. For a contractor, the business pays zero of this. Think about it. On a $100,000 payment, that's more than $7,600 that stays right in the company's pocket. That adds up incredibly fast. So, okay, it's pretty obvious why businesses would lean towards hiring contractors. But what they want doesn't really matter if they end up on the wrong side of the law. And that brings us to the most important question of all. How do the legal authorities, like the IRS, actually figure out what a worker's true status is? So, how do they decide? Here's the kicker. It's not based on what the contract says. It's based on the reality of the working relationship, what's actually happening day to day. And to figure that out, the IRS and the courts use a framework that's built around 3 core legal tests. Let's break them down. These 3 categories are behavioral control, financial control, and the type of relationship. I want you to think of them as 3 different lenses that regulators use to look at the situation to get the complete picture. So, let's dive into exactly what they're looking for in each one. First up, we have behavioral control. This one is all about the how. Does the company have the right to direct and control how the worker gets the job done? You know, if the company is giving super detailed instructions, requiring specific training, telling you when and where to work, or giving you all the essential equipment, well, that is pointing very heavily towards an employee relationship. The second test is all about financial control. Who's in charge of the business side of the job? An employee, they're typically paid on a set schedule, an hourly wage or a salary. A true independent contractor, on the other hand, is usually paid a flat fee for a specific project. They're also covering their own expenses, and they're not getting employee benefits like health insurance. And the final test, it looks at the nature of the relationship itself. This is where they kind of zoom out and look at the big picture. Is this person doing a job that's essential to the core function of the business? I mean, an accountant for a bakery is one thing. A baker is something else entirely. Is the relationship meant to be permanent and ongoing, or is it for a specific project with a clear end date? A real contractor should also be totally free to work for other clients, even direct competitors. Okay, so we've covered the legal theory. Now, how does a business owner actually apply all this? Let's walk through a practical playbook for working with contractors the right way and, minimizing that risk of getting it wrong. The source material lays out some really clear best practices here. First off, be super careful about taking a former employee and just reclassifying them as a contractor. That's a huge red flag for auditors. Try to use contractors for things that are not essential to your main business. Always, always define the work in terms of a specific project with a clear end. And make sure they are using their own equipment and getting paid a flat fee, not by the hour. But here is the most crucial point of all. You can have the most perfect ironclad contract in the world, but it means absolutely nothing if what you do day to day contradicts it. The agreement has to be detailed and clear for sure, but what really truly matters is that both of you actually follow it. The reality of the relationship always trumps the paper it's written on. All right, so we've covered the employer's angle, and we've gone through the legal framework. Now, let's finally circle back and solve that puzzle we started with. Why would a smart, talented worker actively choose to be an independent contractor? The answer really comes down to a fundamental shift in mindset. It's about going from being just one gear in somebody else's machine to becoming the machine yourself. And the motivation isn't just flexibility, it's about becoming a business owner, which gives you access to a whole new world of financial tools. Just look at this comparison. An employee is often described as having a glass wallet. The money comes in, it gets taxed, and there are very few chances to take deductions. A contractor, though, is operating a business, and that opens up a massive potential for deducting legitimate business expenses, which can seriously lower their overall taxable income. So what's actually in this financial toolkit? Well, they can deduct parts of their home office, their car use, supplies, software, the list goes on. For tax planning, they can even hire their own family members. And this is a huge one. They can set up these incredibly powerful retirement accounts like a SEP IRA or a solo 401k, which let them save way more for retirement on a tax-deferred basis than a typical employee ever could. So the crucial point is this. For the right person, the tax advantages and the retirement benefits of being a contractor can actually far outweigh the security of being an employee. It's a calculated trade-off. And all of this leaves us with one last big question for the future. As the gig economy keeps blurring these old traditional roles, will this legal line we've just spent all this time exploring eventually just fade away altogether?